Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And guys, we took a day trade today. Not a huge surprise because you guys know we're taking a little bit of a step back from swing trading and we're focusing on getting in and out of positions during the same trading day, focusing on those small returns, right? Those 1, 2, 3% returns because we understand the game that if you guys can make 3% per month, you're in the top 5% of all traders in the world. So, for me, it's just all about consistency and understanding and focusing on our checklist. Like I said, you guys know that normally I am a swing trader, but the reason why we took a step back for everybody asking is because of volatility. Right now, we've seen sell off from a lot of ETFs, from the pretty much S&P 500, the Dow Jones, the NASDAQ. So holding a position overnight just increases the risk right now because after hours, if the Trump administration puts out tariffs, this could cause selling pressure or even buying pressure. It all depends on the day, but anytime you can't predict a movement, it's just better to just sit on the sidelines. But one of the ways that I can get around this is by just day trading stocks. So I'm focusing on pretty much high volatile stocks that sell off to an undervalued point. And we'll talk about it more here in a minute. But I hope you guys all enjoy this. If you guys want to learn more about trading, check out our school. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, and exciting news. We are now going to be offering a day trading segment in that course. It's going to be coming out in the next couple of months, so stay tuned for that. And if you guys buy the course now, you guys get grandfathered in. So check it out. We have a 50% off sale going on by using code FIRST50. The first 50 people get 50% off. So check it out down below. You won't regret it. And guys, let's jump into this here. So when it comes to day trading and swing trading and trading in general, you need to have an edge. You need to have a strategy or an edge or at least some sort of checklist. So what I focus on is my checklist. My checklist is one of the most important things, most important factors when it comes with trading, because I want to make sure that the stock I'm trading follows my approach and I'm not just trading a random stock. And that's very, very important. So the stock here that we took a nice small position with today was Tesla. Tesla here was a stock that reported earnings after hours yesterday. And what happened is they got a lot of buying pressure actually pre-market. The stock popped up because they released, after hours, got a lot of buying pressure after hours. And the thing is, though, is even though they missed expectations, they still got buying pressure because the general market was up. So when looking at the stock here, right now, we're looking at the daily time frame, okay? So normally with like swing trading, I focus on the daily time frame just because I'm holding a position for a couple of days. So I still like to look at it, surprisingly, for my day trades. And the reason why is because it can just help with support, having a strong support, you can find it on the daily all day long. So you guys can see I drew out this nice, really strong trend line right here. So that's that red line. Sells off, hits it once, hits it here twice, 3 times, 4 times. And recently, right, as we look at it, sells off down to that same level again. So it hits it once back there, 2, 3, 4, a heavy amount of support, which is very, very important. Now, obviously, a lot of you guys would go, well, why didn't you just buy it on the trend line, right? That doesn't make sense and hold it for a couple of days. Well, the thing is honestly, I was really, really considering it, but the only thing that did concern me was the earnings report. Tesla's previous couple of earnings, you guys can see they announced earnings here, sell off. Earnings here, buying pressure, then sell off. Earnings here, sell off. So, it's literally a 50-50 chance of making money holding a stock through an earnings. So what do I always say? I am not going to hold it. Very rare will I ever hold a stock through an earnings report. So with Tesla here, the first thing is that trend and support, okay? Those are very, very important metrics for trading. The next thing here is looking at the RSI. Now, the RSI, when it comes with like day trading, it's not that big of a problem if you are getting in on a little bit of a higher RSI. And the reason why is because you're just scalping the trade for the day. So, if it's not really a swing trade, it's a day trade. So you don't have to pay too much attention to that. But one of the things that I do think is important is to going to some sort of lower time frame. And this is what's important here is you guys can see here that we've seen this heavy amount of support in this zone, right? It sells off, buying pressure, buying pressure, buying pressure. Look at this zone in here. Each and every time it hits it, we just have heavy amount of support in it. recently sold off down in here. Okay. Now, like I said, I normally would buy this stock all day long, but we had the earnings. The earnings made it more risky. So, what I decided to do is to just wait for the earnings to pass and look for another time frame. So, now here as I go to a lower time frame like the 5-minute chart, this is where things start to get very, very interesting. So, looking at this stock here, you guys can see that when the stock initially pushed up above this red line here, what happened, right? It started to get a lot of buying pressure on this. Even here, sold off here. We had this long wick, got buying pressure. So now here I go, okay, the stock has heavy support here on this red line, which is a 200-day moving average line. It acts as support, and we'll also see it act as resistance. So if it sells off down below it like it did in here, we see tendencies of it using it as, resistance. So ideally, you want to get in on it where it's on some sort of support here. Another thing that I do think is important is to look at basic. This is basic candlestick recognition is going to be a doji candle. So this is this candle right here. Okay. This historically is a trend reversal candle. Okay. It formed on that 200-day moving average line, which is great. Okay. Because it's a heavy support for the stock. Okay. We also were waiting for the first initial push to form above that doge. So right here. Okay. So as that stock pushed up, we can draw it out, pushed up above that high on that doge was our entry point. Okay. Getting in right here at about 248.30. Okay. So right in this zone. So now my thought process was this: entering here, keeping our stop loss below 244. Okay, risking about a little less than 1.7% for a possible push up to the resistance, which was the pre-market high, which was up here. Okay, so that gives a 2.2 risk versus reward. So this is why trading is so incredibly important here, is because risk management is key. So now here, if we are starting out right with trading and we have, let's just say $1,500, we find a stock like this 30 times over the course of a year, risking that 1.7% with a 2.2 risk versus reward. If your win-loss percentage is 50-50, guess what? You grew your account from $1,500 to $2,000 at the end of the year. Even with 45%, you're still profitable. Even with 40%, guess what? You're still profitable. I think you break even near and around 35%. Little profit at 35%. So 35% of the trades you take, you win, and you're still profitable. That's why good risk management is so incredibly important here. So now here, as that stock popped up, we continued to move the stop loss up and up and up. And the stop loss approach was waiting for a candle to push below the previous low. So you guys can see it's going up and up and up and up. And this was our exit right here, because this candle right here formed below the previous closing price. Okay. So that was our exit right here, entry point down here. Obviously, we did not buy at the peak bottom nor sell at the peak top, but that is very, very common to see. So guys, I hope you guys all enjoyed today's video. If you have any questions, feel free to ask down below. And this is why day trading is so incredibly impactful. So make sure you guys check out our school. You guys can get 50% off by using code FIRST50. I'll see you guys in there. Like, follow for more, and we'll see you guys.